Okay, and then what I'll be doing as time allows, I will be going ahead and posting up the lectures next to the chapters. So you'll see the chapter PDF, and you will see the lecture underneath that. And usually it takes us a couple, if not maybe three meetings to actually cover an entire chapter, and I'll post those accordingly under the chapters. Sometimes we'll start a chapter and then we'll go into a new chapter. So I may post, say, if we didn't finish chapter 1 next time, and we did finish chapter 1 and we started chapter 2, I might post the end of chapter 1 under chapter 2, and you should be able to figure that out as to where to find the relevant material. There was something else there. Oh, make sure you have ordered your textbook now. Okay, you need to make sure and activate your software and order your textbook from Becker. You need to do that in the Becker software. You could see in version 4.3, but my understanding from last time, some folks let me know that they're not showing that you have version 4.3 available to redeem in your software. So redeem version 4.2, and then there will be, my understanding is fairly infrequent, small differences between 4.2 and 4.3. And you can print those particular pages out, and I'll alert you to those as we come to them. Question. Okay, if there are no questions, then I'm going to go ahead and start us into our chapter 1 lecture. Okay, and you can see that we have our table of contents. And what I do when we start out a chapter is I typically try to give you some sort of relative weighting as to the material that's covered. For example, we're going to talk about standards and conceptual framework here at the beginning. And that's probably, roughly in the area. And of course, I'm not going to have the blue on blue here. That's going to be roughly about 2 to 3 points. However, we're going to see that our understanding of the standards and the conceptual framework will become relevant when we do a research task and a task-based simulation. I'm going to actually walk through with you one of these here in a couple seconds or in a little while. We'll look at that and how to use the research tool to allow you to be able to get the points that might come up in a task-based, that will come up. There's always one on the exam that will come up in a task-based simulation research task that they ask you to do. We'll talk about the income statement, and really the focus is on the income statement here, even though they say the balance sheet. We'll cover the balance sheet as we go through other lectures and start talking about different accounts, cash, accounts receivable, etc. But the income statement, and really the focus is on the presentation of the income statement, will be about 5 points on your exam. Heavy point area in this class is revenue recognition, and there's going to be about 10 points there. I think we'll get through part 1 of revenue recognition tonight, and we'll deal with part 2 next time. Okay, income statement, discontinued operations, 5 points. And what I'm going to do is I'm going to complete the discussion of the income statement. So we'll go from module 1 to module 2 to module 5. So we finish up our discussion of the income statement. Then we'll come back up tonight to module 3 to talk about part 1 of revenue recognition. Next time, we'll get into part 2 of revenue recognition. Accounting changes and error correction have long been an area that the examiners like to spend time with. That's about a 10-point area. The way they're looking at it, if you are a CPA, you are like the doctor of financial statements. And if financial statements are sick, the way they are cured is through correction of errors through adjusting entries. And so we're going to talk at some length about that, and we'll get into that next time. Comprehensive income. And by the way, the adjusting journal entries that they give us in module 8 are really, in my opinion, part and parcel of how you correct the errors through adjusting journal entries. And then statement of comprehensive income is about a 5-point area. And again, we'll get to that next time. Question. Okay, good. Then let's go ahead and let's start to jump ourselves into the discussion here. which is going to be Module 1, Standards and Conceptual Framework. Okay, and we start to take a look at this and we start to talk about standard setting bodies in the United States. Okay, now when we take a look, they say that the Security Exchange Commission is the entity that has the legal authority to establish accounting standards in the US. Now, when we look at the Security Exchange Commission, the SEC was established in 1934 under the Securities Act. Coming after the Great Depression, we have the SEC, and the SEC regulates through the issue of interstate commerce, right? Because stock can be traded across state lines. Then public companies are subject to SEC rules and regulations. And the SEC has issued a variety of items, including these SX regulations, financial reporting release, etc. Okay, all of these different things the SEC issues. Now, even though the SEC does issue some guidance, and even though the SEC has the legal authority to set the accounting standards, you come back up and they tell us that even though the SEC has the authority to set the accounting standards, they really delegated that to the profession. So what they did in 1939, they created this entity called the Committee on Accounting Procedures. It was inside of the AICPA, and they promulgated something called Accounting Research Bulletins, and that was the case until 1959. Then what? Then they created the Accounting Principles Board, once again inside of the AICPA, and they issued Accounting Principle Board opinions. So what happens is you have the CAP, then you have the Accounting Principles Board, and of course these new standard setters build upon what the previous standard setters did. Around 1972, they form a committee called the WEEC Committee, and the WEEC Committee's whole job is to look at the standard setting process and see if any changes need to be made. Well, the WEEC Committee, which WEEC was the name of the chairman, turns around and says, you know, it's a problem that you have the AICPA, which is basically an organization made up of CPAs, which essentially receive their revenues from the companies that they audit, conflict of interest. Those entities, the AICPA, should not be issuing accounting standards. So they recommended the establishment of a private, not-for-profit organization. Instead, that organization should be called the Financial Accounting Standards Board, and that created the FASB. The Financial Accounting Standards Board is the current standard setter. And what they did was they went ahead and they have issued standards from 1973 until the current time. And you can see some of the different items that they issue, including statements on standards for statements of financial accounting standards, interpretations, and so on. Okay. Now, I'm not so interested in the different standards that these different entities had created over time. In some cases, the accounting research bulletins that were created by the Committee on Accounting Procedure are still in place. For example, next time in Chapter 1, when we talk about accounting for long-term construction contracts, we're still following standards that were promulgated by the Committee on Accounting Procedure. I think it's Accounting Research Bulletin 43 is where that information was originally contained. And I don't care about those different standards because in 2009, the FASB went ahead and created the codification. And what the codification did was it took all of the different standards and it sat there and it listed them by topic. So now when you want to do research, you will go into the codification, and depending on what issue you're looking at, any standard that affects a particular issue. So you're looking at the balance sheet. Anything that would affect the balance sheet, they codified all those different standards under the subject, under the topic of balance sheet. So what happens when you look something up, and guys, I gotta get up and get a different notation I had made in a different book. Forgot that I had written that elsewhere. Okay. Now, when you look up a standard, okay, or look up a particular thing that you're researching, not standard necessarily, you will look into area. Then you will look into topic. Okay. Then you'll look into subtopic. Okay. Then you'll look into section. And finally, you'll look into whatever paragraph is associated with that. Okay. Now, on the CPA exam, they're going to ask you, you don't have to worry so much about area. They're going to ask you to go ahead and provide your answer into topic, subtopic, section, and paragraph. So what I want to do is I want to go ahead and just kind of show you what that research might look like. Okay, so I'm going to put my machine out of tablet mode, and I'm going to go into my Becker software that you would have downloaded by now. If you haven't, you need to get on that and download that. And let me go ahead and find my little, I have a couple different ones. I think it's this one I need to go to. Okay, and I go ahead and I sign in. And for this particular exercise, guys, even though we are sitting here and we're obviously in Financial 1, I want to go ahead and I want to look at something from F7, dealing with my statement of cash flows. Now, you look and you can see that I'm here in Module 5. Okay, and I'm going to go to, I'm in Chapter 7. I'm going to go down to Module 5, Statement of Cash Flows. Okay, and I come in, and you won't have it for every single module, but for many modules, as you do your homework, you will see simulations. Okay, and I will be looking to see that you're doing your homework, guys, as we go through material. Now, that won't be relevant to Chapter 7, obviously, but starting pretty quickly, I'll look to see that you're making progress in your F1 homework and so on as we go through. Now, as you look, you can see that on the exam itself, okay, you won't have this many task-based simulation. Remember, you have what? You have 3 testlets. The first one has 2 task-based simulation, and the last 2 have 3 for a total of 8 task-based simulation. But sometimes Becker has extra ones in there because they want to give you more practice as you head towards your exam. Now, the one that I'm going to look at here is number 3. Okay. And here they tell us that the controller of SFB Inc. asked whether or not to include cash flow per share data in the company's financial statement. Which section of the authoritative guidance best addresses the presentation of cash flow per share data in the financial statements? And they ask you to format your answer. And guys, even though they're not calling it out as such, that is what? That is topic, subtopic, section, and paragraph. Again, they don't necessarily ask us to give the area. They do not ask for that. They just ask us to give the topic, subtopic, section, and paragraph. So what you do is you click up here where it says authoritative literature. Okay. And here you can look into the different standards. Now, if you were doing the auditing exam, you'd be interested in the AICPA professional standards, the Public Company Accounting Oversight Board. We're not on the auditing exam. If you're in the regulation exam, you'd be interested in the Internal Revenue Code. We are on the FAR exam, so we are interested in the FASB codification, and I click view on there. Now, it is worthwhile to open this up at this point because you can see that as you look, the codification lists these various topics. Now you look and you're like, well, I don't know, this isn't really talking about, I guess, cash as an asset. But I look here and I click on general purpose, and they give me some general purpose. I look at presentation and they tell me, statement of cash flows is right here. So they were asking, should cash flow per share be presented on the financial statement? So when I go ahead and I click on the statement of cash flows, notice I have these different things. I have overall, and I have what? Presentation. So I'm thinking, well, look, reporting cash flow per share is sort of a what? Presentation issue, isn't it? That's something that you're presenting on the financial statement. So I just follow that hunch a little bit, and I go ahead and I click on search within. So now it's going to be looking in that particular section to see if I can find that information about cash flow per share. Now I don't put the word cash flow in there, because if I did, I would be what? I would be basically seeing the word cash flow all over the statement cash flow. So I'm trying to refine that by putting the information per share. And I come over here, and when I open this up, it says what? Other presentation matters section provides guidance, and it says that what? Information about earnings per share, etc. And I keep scrolling down, and I look, and they say what? Here's some per share. Financial statements shall not report the amount of cash flow per share. Does that answer the question? So now I know that I am in what? I am in topic 230. I am sitting here, and I am what? I was in overall, and I was in section what? Section 45, and I was in paragraph what? Paragraph, what was it? 3?
3.
So I go ahead and I put the 3, and I would submit my answer, and then of course it won't tell me whether or not I got the right answer. Well, for Becker purposes, it does. On the exam, of course, they wouldn't tell me that, but here they do. Now you look at that and you're like, well, John, that was kind of, funky there, that I had to know an awful lot. Let's say I just don't know anything about this. Well, then you might just go ahead and say cash flow per share. Okay, I'm going to uncheck that search within now, because I wasn't really able to refine it. And I might have to start to do what? I might have to start to look and kind of, search through, and probably, have to find something that looks about right. And I keep looking, revenue. I don't think so. I keep coming down, not for profit. No, this didn't really ask me not for profit. I keep coming down. Statement of cash flows, presentation. So I could have also done what? Kind of got to that 45 section down there and whatnot. And then, because I'm really not really sure where that is, I could keep here and keep looking for the word per share, but I got all that other traffic with the cash flow. And so then I could go ahead and refine my search if I wanted to narrow it down a little more by going ahead and putting per share and then clicking on that and going back and doing, now we're back to where I just showed you, where we saw that that was in paragraph 3. Okay. Now, a lot of times I'll get students, well, can I do this? Can I do that? And my answer to you is, I don't know. Okay. You will work with this in your software, and you will become better and better at this. I can't sit here and give you a whole set of, things that you might want to or not do as you get better at this. The research, guys, is probably one of the easier tasks that you will do on the exam, and you'll get the points here. Now, let's say I went through this and I was like, I don't know, I can't find it exactly. But you would probably have a good feeling that what? If it's cash flow question, you're in what? 230. So this is probably not a bad thing for you to go ahead and put on a flashcard, is what things are covered in these various topics: 205, 210, 220, 230. That probably would be a good thing, because you can get partial credit by just having 230. It's a good guess to say that things appear in the overall category, because overall is going to be the most comprehensive of any of these areas that you look in. When you look at some of these others, you're looking past overall, you start getting in much more refined areas than just overall. Most stuff is in overall. And then again, like I was saying, since they're asking about should you display statement of cash flow, you're thinking, okay, presentation 45. If you couldn't find the exact area in there for the question you asked, you could just guess the paragraph and you would get partial credit for what you put down correctly. Question. Okay, good. All right. So that's really, even though they talk about the standards here to us, where's my book? Okay, and they list all these different standards. It doesn't matter because it's all been codified now by topic, by subject. Okay. Okay, good. Now you come over, and some years back, and I think when they first started this whole private company council, they thought it was going to be a big deal, but it really has not quite taken off the way maybe I think some folks thought it would. But what happens is companies were saying, well, look, I'm a smaller company. Do I really need all of this stuff that we require of public companies? And so FASB created, or the Financial Accounting Foundation, which is the holding company, if you will, of the FASB, created the Private Company Council to improve standards for privately held companies. And there are very limited times where we'll say, well, if you're a privately held company, you don't have to do some things that we talk about in the accounting standards that would be applicable to public companies. That is not nearly the interesting part that it would be if we were talking about auditing standards, where there is a fairly significant difference between the auditing standards for public company versus non-public. When it comes to the accounting for the CPA exam, not a big deal. Okay. Now we talk about the conceptual framework. Okay. And the conceptual framework is basically where the FASB comes out and gives its basis, its where and why fors for the various pronouncements it issues. Okay. Now, when we look at the conceptual framework, okay, we're going to see that the concept statements themselves do not constitute GAAP. They give us the what? The reasoning behind the standards. Now, one of the first things that we do, sorry guys, 1 second. Here it is. It was right there. That's why I couldn't find it, because it was right there. It's like the thing that's right there in front of you, right? I couldn't find it. Okay. But when we look at the concept statements, what happens here is they in themselves are not GAAP. They provide the basis for GAAP for business and not-for-profit entities. Okay. So flashcard that, because that is a thing that the CPA exam likes to trick you on, is they like to make you think that the concept statements themselves are GAAP. They are not GAAP in and of themselves. They constitute GAAP. Okay, they're they don't constitute GAAP. They give you the reasoning behind GAPs. Flashcard that. Now, when I tell you to flashcard something, okay, basically what I'm saying to you is you should either look into your flashcards. Well, you should definitely look into your flashcards that Becker has, that you have acquired as part of your package here that Becker has pre-made, and see if that particular flashcard is in there. If it's not, you're going to have to handwrite your own flashcard. Okay, so make sure that you are doing that, that you're making the flashcard indications that I'm giving you, so that you have important information that we talk about here in class that you should be looking at. Okay, I'm just making a quick note of something. Okay. Okay, question on that, on how we do the flashcards. Okay, I will suggest the flashcards to you, and then you should be going and making those flashcards that I suggest to you. Again, you don't have to make them if they're already provided in your package. Okay. Okay, good. Now we come in and we look at the conceptual framework. So what happens is the way the FASB has communicated its conceptual framework is through a series of concept statements. They don't necessarily constitute GAAP, but they give us the whys and wherefores. Okay, so what happens is they tell us that the objective of general purpose financial reporting is to provide information about the reporting entity that is useful to primary users. Now you look at this and you say, Well, come on, John. I mean, everybody knows that you prepare financial statements for the users of the statements. Well, that's known easily now. But back in the day when FASB first came out with these concept statements, there was some discussion as whether or not the financial statements were prepared for management or were they prepared for those outside the company, external users. FASB comes in and says, yes, we're preparing the statements for primary users, and the primary users are what? Lenders and creditors. Now, there are other parties that are outside, such as regulators, the IRS, et cetera, who are what? Who may want to use the statements, but they are not considered primary users. They would be considered, even though they don't call them out as such, they would be considered secondary users. Okay. So the concept statement says we are preparing financial statements for these primary users. Primary users are investors and creditors. There's others outside the entity. We're preparing the information for external users. There's others outside the company, external to the company, that may be using these statements, but they're not considered our primary users. Okay. Now you come through and you take a look at chapter 3. This concept statement number 8, by the way, guys, which we just looked at, information that's contained in chapter 1 of the concept statement. You don't have to worry about the chapters, but if it said statement on financial accounting concept number 8, that's sort of the omnibus one, in which they've included various chapters of information that the exam may ask us about. And in chapter 3, they talk about fundamental qualitative characteristics. And then when you come down, and I'm going to go back in a second, they will also talk about enhancing qualitative. So you have fundamental, and then you have enhancing qualitative characteristics. So they're saying, yeah, we're preparing these financial statements for external users, primary users, investors, and creditors, but what will really make this information useful to them in their investment and credit decisions? So information should be relevant. It should have faithful representation, and it should have relevance and faithful representation. Okay. Now let's take a look at what makes the information relevant. And information is relevant if it has predictive value, tells us something about the future, has confirmatory value, tells us something about the past or gives us feedback, and it is material. In other words, it has the ability to change somebody's decision making. And materiality could be what? Materiality could be both quantitative and qualitative. Okay. Now, flashcard, the ingredients of relevance. Okay. Predictive value, confirmatory value, and it has to be material. That makes it relevant to the decision making. What makes it have faithful representation? Okay, how do we know that it is believable, that it is the truth in a way, right? And it has to have completeness. It has to be neutral, and it should be free from error. Okay, now complete data, what is happening? Let's say you have, a significant other, and they come home late. They come home at 2 o'clock in the morning. You say, where were you? They say, oh, I worked late. And you say, oh, okay. And what they tell you is they worked late. And it's true, they did work late. They were supposed to get off at 5. They got off at 5:15. They ran into somebody, on the street there. And they went and they stayed out with that person until 2 o'clock in the morning. Well, was it true that they worked late? Yes, but they didn't give you complete information. So that really didn't have faithful representation, right? Neutral means that we're not trying to give a bias. We're just letting the standards drive what it is that we're preparing in the financial statements. And freedom from error doesn't mean that we'll never make an error, but we certainly are striving to have error-free information, accurate information. Okay, so flashcard, the ingredients of faithful representation. So on the blank side of the card, you would, if you didn't see it in your Becker cards, would say, what makes accounting information relevant? Answer on the line side, predictive value, confirmatory value, materiality. On the blank side of the faithful representation card, what makes accounting information have faithful representation? It is complete, it is neutral, and it is free from error. Okay, now note here, guys, that neither relevance nor faithful representation contain similar ingredients. They have different ingredients, don't they? Relevance has predictive, confirmatory, and materiality. Faithful representation, complete, neutral, and freedom from error. So there's no overlap of the ingredients, right? Okay, question. Okay, good. Now you come over and let's take a look at the enhancing. Those were our fundamental, our enhancing characteristics, okay? And when we talk about enhancing characteristics, we talk about comparability. Now, when we look at comparability, that's going to be what? Comparability between companies. So we want to be able to compare Apple to Microsoft, whatever, right? And what? And it also includes consistency, okay? So that means what? Between periods. So we should use the same accounting standards from year 1 to year 2. Now, does that mean that we can't ever change our accounting standards? Question. Guys, don't get into the mode where you tune out on me and just let the thing run and pretend like you're, paying attention.
No.
Because we're not gonna get along if that's the case. Does that mean that you cannot change accounting periods? I mean, change accounting standards from period to period? What, Paulina?
No.
Right, it doesn't mean that. We can change, but when we do, we will have to put bright lines of disclosure around the fact that we've changed our accounting standards, and that really will be the subject of that later module that we'll get into when we talk about accounting changes and error correction. Okay, good. Okay, verifiability. This is the audit process. Think about it. What an auditor does, what a CPA does is come in behind the company and verify the information that's in there and give an opinion that says the financial statements are fairly stated. Timeliness. This is why when we're dealing with, say, a public company, some public companies have to issue information within 30 days, depending on their size, 60 days, 90 days for smaller companies. But we want the information in the hands of users soon enough to be able to help inform their decision-making, right? And then understandability is really the reason that you have all kinds of footnote requirements associated with financial information, because the FASB realizes that, hey, in our conceptual framework as an enhancing qualitative characteristic, we say that the information has to be understandable. So we're going to require that there be footnotes that expound on the information that's contained in the dollar amounts and whatnot that are contained in the financial statements. Okay. Okay, good. Now, we talk about many of these things on the financial statements here coming up. And guys, I'm not going to sit here and read through you what assets, liabilities are, etc., what revenues, what expenses are. I figure if you've gotten this far, you know a lot of these things already, and I'm not going to belabor points that you already know. Okay, now you come down and we come over, and I do want to focus on a couple of things here. Okay, and we will actually get to some more of this stuff here, and we actually repeat some of this stuff a little bit later. Okay, so with that, I want to go ahead and put up our first question. So the way we do the class here is we will go ahead and we put up the poll. Okay, and I always forget that each term I have to create the poll over again for some strange reason. I don't know why they don't just let that ride from period to period, from class to class. Okay, oh, okay, there it is. So I'm going to launch that. Okay, good. It's good. Okay, so go ahead and take a look at this question that you see on the screen and choose what your best answer is. And typically your best choice is, and typically guys, I give about 2 minutes to answer a question, although I'll make a speech about how much time you should spend with a question like this here in a second. But go ahead, take a look at this and do your best. You give me your best choice. Okay, guys, we're about 1.5 minutes into this question, and I'm going to go ahead and end the poll because everyone has answered this. And I would say, even though I would have given you 2 minutes if everyone hadn't gotten to it yet, I would say that a question like this should probably take you the neighborhood of maybe 15 seconds to answer on the CPA exam, even though you should average about 1.5 minutes per question. Some questions might take you 15, 20, 30 seconds, a question like this, for example. Other questions might take you a little more than 1.5 minutes, maybe 2 minutes. At the most, for any one question, you should not spend any more than 3 minutes with that question. Once you go past the 3-minute mark, you are taking too long to answer that question. It is time to cut your losses and start to limit it down to maybe 1 or 2 correct answers. Okay. Now, when you look at this one, and most of us got it right, the answer is B. 67% of us got it right. The answer is B. When you look at this one, the first thing you need to remember is that I said to you what? None of the neither relevance nor faithful representation share the same ingredients. So they're asking us, is completeness an ingredient of, and you look, and choice C, which a couple of us picked, is yes, yes. Neither relevance nor faithful representation, which are primary characteristics of accounting information, neither of them share an ingredient. So yes, yes is incorrect. Now you look, and you would have had a flashcard that you would have made, that you would have memorized, that told you that what? In order for information to have faithful representation, it has to be complete. Your friend was not being honest. They were not faithful to you. They were not representing faithfully to you when they didn't give you complete information. Yes, they worked late, but that was not the substantial reason why they came home at 2 in the morning. So faithful representation, you want complete information to have faithful representation. Again, we know that these ingredients do not appear twice in the qualitative characteristics. Question. Okay, good. Now, if you missed this question, there's 1 or 2 things that went on. One, you kind of got a little bit confused and about remembering which ingredients were in relevance, which were in faithful representation. I suspect that some of you missed it because you were tuned out during the discussion. There is no reason to be taking Accounting 377 here at Golden Gate to tune out while I'm explaining to you and giving you strategies as to how to pass the CPA exam. The objective of this program, of this class, is to get you to pass the CPA exam. When you pass the CPA exam, the state will say you can never take this exam again. You have passed this exam. You get to keep these scores for life. Now all you have to do is get the experience that you need to be able to get the license. And when you get the license, they put your name on the license. They don't put Golden Gate's name on the license. They don't say this person got a good grade in accounting 377. They don't put my name on the license. They don't put the name of the company where you got the experience. They put your name. So this is all about you getting a license in the state of California, getting a credential in the state of California that says that you have the knowledge and expertise to be someone that provides assurance on financial information that will be used by investors and creditors to make investment credit decisions. So you may like to look at the stock market and all that kind of stuff. None of it functions without licensed individuals that you are working here to be able to provide the assurance on the financial information. So you want to engage, you want to understand where this whole train is going, okay? Okay, good. So I can go ahead and close that poll off. And let's go ahead and let's take a look now at the discussion of the income statement. Okay, and let's start to look at some more terminology. Okay, and you know that on the income statement, we report revenues, we report expenses, we could report gains, we could report losses. Okay, now for revenues and expenses, I want you to put down here that these are things that are normal course of business. They are normal course of business, okay? And I want you to put down here that they are considered operating items. So these are day-to-day things, okay? And they were reported, what? They are reported at their gross amounts, okay, on the income statement. So what does all that mean? Okay, so let's say we're talking about a company that sells, I don't know, let's say we're talking about a teaching organization. Let's do that, okay? So revenue is going to be what? Normal course of business operating items. Revenue is going to be tuition, all right? Expenses are going to be what? Salaries that they pay their faculty, that they're paying the administrative folks, etc., right? So what happens when they prepare their income statement? They'll show their revenue gross, they'll show their expenses gross, and the difference between those revenue and expenses, they'll show them as operating items, and they will generate something called operating income. Now what happens? Teaching organizations have equipment, right? They have computers, they have projectors, these sort of things, right? So let's say that the teaching organization goes and sells its old projectors because it's going to put in a bunch of wireless projectors. So what happens? They go to a projector dealer and they sell all of those projectors to the dealer for more than their carrying amount. Is that going to be a gain or a loss?
Gain.
I'm sorry? Gain. That's going to be a gain. Good. They're going to sell it for more than its book value. That's going to be a gain. But let's say the projector dealer says, well, I'm going to charge you a commission fee off of that as well. Well, what they would do is they would calculate the amount they receive from the projector dealer, right? Minus the book value, but they would adjust that down for whatever commissions they have to pay. So they would be reporting that at its what? At its net amount. So net amounts. Gains are reported at net amounts, okay? And gains and losses are not normal course of business. Course of business, not normal course of business, and they are considered what? Non-operating. they're considered non-operating, because what happens? We're sitting here and we're not in the business of selling projectors. Okay, we're not in that business. We can sell them, and we sell them for more than their book value. That's a gain. We had to pay off some, commission or something. We would subtract that from that total gain and report it net. But we would show that in a separate section on the income statement called non-operating. It would be the non-operating section. Losses. Let's say the teaching organization's campus gets hit by some kind of mudslide. You're hearing about mudslides or something, right? And there's all kinds of water damage that gets done. What happens? They have to fix the water damage, but there's a certain amount of insurance coverage that comes from that. So what would they do? They would report that loss, and since they're not in the business of being hit by mudslides, they would report that as a non-operating item loss, but they would show it net of any insurance recovery. Okay, so again, gains and losses are shown net, and they are non-operating items. Okay, now what I want you to do is go ahead and make me up a flashcard right here. Okay, and I'm going to dictate this flashcard to you. By dictation, I mean I'm going to speak the words to you, and I'm going to ask you to write it up as a flashcard. Okay, so on the blank side of the card, you would write the following words: compare revenues and expenses to gains and losses. Compare revenue and expenses to gains and losses. Compare revenues and expenses to gains and losses. That would go on the blank side. Line side of the card would say revenues and expenses are operating items and are reported gross on the income statement. Revenue and expenses are operating items and they are reported gross on the income statement. Gains and losses are non-operating items and they are reported net on the income statement. Gains and losses are non-operating items and they are reported net. Blank side of the card, compare revenues and expenses to gains and losses. Line side of the card, answer revenue and expenses are operating items reported gross. Gains and losses are non-operating items reported net. Okay. Now, the reason I'm sort of giving you the detail and dictating the flashcard to you here, notice how we've highlighted a whole, section, paragraph, whatever, of information here. And I've told you to flashcard that. I'm showing you how to take the information that is in textbook form and putting it into flashcard form. My goal is by the time you are doing your final review, the 2 weeks before the exam, your textbook can be on the shelf and you really should be dealing with your flashcards. And as I mentioned last time, and if you've been in another class I've mentioned, you look at your flashcards for F1, you do the multiple choice questions and a task-based simulation for F1. You do that as part of your weekly study as you're going through the material, but then that really becomes important as you go through that final review process. So you need to be spending, and I talked last time about the amount of time you need to spend. You probably need to spend up front per lecture session about 2 to 3 hours just making flashcards. Then you spend about an hour memorizing the cards, and then about 2 to 3 hours working the homework associated with those modules that we would have covered during the week. Question? Okay, good. Now you come over and we start talking about multiple step income statement and how that will allow us to calculate that income from continuing operations. And we know right out of the gate, if it's income from continuing operations, it's not going to be including discontinued operations. And we'll talk more about that later. Okay. And they talk to us in terms of a multiple step income statement versus a single step income statement, which you see coming over to the next page, the single step income statement. Now, I'm going to go ahead and I'm going to start with the single step income statement. And notice they tell me here that the net income is $25 is the net income, okay? Now what happens? In the single step, we take all of the things that increase revenue, anything that increases revenue. So my sales revenue, my interest revenue, my gains, right? Some things, are so small, we just stick them into other revenue. Anything that increases my net income goes into one big chunk. And then anything that decreases my revenue, such as cost of goods sold, selling expenses, general and administrative, interest expense, losses, anything that decreases my net income goes into one big section. And the difference is what? Is my net income. Okay? And we call that what? Income from continuing operations. Now, I'm a little annoyed by the fact that Becker had to stick in here discontinued operations because we're not really dealing with that now. So just sort of put that in the back of your mind because we're going to get to that in module 5. I'm going to go and look at that with you here in a little while. So don't worry about what that is now. Just know revenues minus expenses gives us what? Income from continuing operations. If you had a discontinued operation, then you would call that out. Sometimes you'll see an income statement where it'll just say net income, because if there aren't any discontinued operations, you don't have to call out income from continuing operations, okay? All right, now that is what they call the single step, and maybe they should call it the two-step because you have the revenues minus the expenses, but I guess they didn't want the country western people to get mad at them, so they just called it the single step, okay? Now, coming back up, the multiple step, which is what FASB expects companies will provide. So the single step, you'll sometimes see that, and you'll see it in, like the management discussion analysis or something, they might include a single step, but the actual income statement itself will follow the multiple step approach, okay? Now, when we look at the multiple step approach, okay, they tell us that we will report our operating revenues and expenses separately from what? Non-operating items. So let's just take a look, guys, and don't worry about how they turn this into an exercise. Just come over and let's look at this multiple step income statement. And what I want you to do is I want you to flashcard this, okay? So by that, I mean, mark it up the way I'm going to show you, and then go to a copier and shrink it down to flashcard size, 3x5 card size. Okay, so this is sitting in your flashcards marked up the way I'm going to ask you to do so. Okay, so we have what? We have our sales, our cost of goods sold, difference is gross margin, okay? And then we have our selling expenses, etc. And then we come all the way down to income from operations, okay? So here I want you to put operating items. It says operating items. Okay, then what? Then we come over and let's look at this a little bit. Selling expenses. Give me some examples of selling expenses, for example, advertising.
Sales commissions.
Good. Sales commissions, okay.
Delivery.
Would you say freight out?
Yes, sir.
Okay, good. It's sprayed out. Good. By the way, guys, I know that my writing is almost impossible to read. I understand that. I've never had good writing. I could never write clearly. Never good. Never will. The older I get, the worse it gets. Okay. So I will always call out what I'm writing. So it's better to listen to what I'm saying than trying to read what I'm saying. sometimes I'll sit there and I'll say freight out, and I'll see students going, what is that? What is that you're writing? Meanwhile, I'm saying freight out. Okay, so listen more than try to read what I'm putting. So advertising, sales commission, good. Freight out. General and administrative expenses. Classic example is what? The CEO's salary. What? Accounting. Is an administrative expense. Okay, so be careful, guys, because what happens, sometimes companies will put that all on one line item, but note that the nature of these things are quite different, aren't they? Advertising versus the CEO salary is a lot different. Okay, and so CEO salary, accounting, you're probably going to be fixed, whereas sales commission is probably going to be variable. So their nature is very different, even though sometimes companies will report them all on one line item. Okay, depreciation expense, etc. And so after we have gone ahead and computed our gross margin, we start taking off the selling, the general administrative, the depreciation. Difference is going to give us income, or in this case, I guess, a loss from continuing operations. Okay. Good. Now we come in and we start having other revenues and gains, other expenses, etc. And we have what? Come all the way down here. Okay. And this is going to give us non-operating items. Not in the normal course of business. Interest revenue, interest expense, for most entities is considered non-operating. Now, if you are a bank, well, bank's whole business is lending money and incurring interest revenue, right? And maybe sometimes borrowing money for whatever purposes and including interest expense, whatever. So from a bank, then those would be up in the operating section. But on the CPA exam, they don't specialize. And for the most part, on the far part of the CPA exam, they're talking about retail entities. And for retail entities, interest revenue, interest expense is almost always going to be listed as non-operating. Gains and losses, right, on the sale of marketable securities, fixed assets, etc. All of these things are considered non-operating. And then you come down and you have what? You have tax. Okay, and again, I wish Becker wouldn't have put the discontinued operation because it just kind of messes up the understanding here. Okay, income from continuing operations, which is what we're really looking for here. Okay, income from continuing operations is constituted of what? Three things. We have operating items, non-operating items. You should have on your flashcard the nature of what these things are, and then tax. Okay, that will yield income from continuing operations. And sometimes you'll just see on a company's financial reports, they'll call that what? Net income, because there is no non-operating items. Okay, so we have our what? We have our operating income, then we have our non-operating items, and that can yield, assuming a company doesn't have discontinued operations, that'll yield net income. If they do have discontinued operations, which we'll get to here in a second for module 5, then you would have to call out your discontinued operations separately, and we'll get into that and how that works here in a little while. Question. Flashcard. This thing noting the three major sections that constitute income from continuing operations: operating items, non-operating items, and tax. Okay. Okay, good. Now we've already looked at the single step. Okay. Balance sheet, blah, blah. I mean, I don't even know why they're showing that here. Of course, we have a balance sheet. Okay, we know that. And that we'll spend quite a bit of time of that in chapters 3 through 8. In chapters 1 and 2, we're going to be hovering around the income statement quite a bit. And then when we get to chapters 3 through 8, we start to talk more about the balance sheet accounts. I'm not worried about that now. Okay. All right, good. Let's take a look at a couple questions here. I'm going to go ahead and put the poll back up. Send me my cursor. Doesn't go play hide and seek with me. I'll give you a couple minutes with that. Okay, guys, we're about over 2 minutes here, and it looks like just about everybody. There's one person that didn't attempt this for some reason, but let's go ahead and let's take a look at the poll here, okay? And 64% of us got this right. There were 3 of us that wanted to choose B, and I can kind of see how maybe B might be tempting. But the correct answer here is D, which just about everybody got right. So let's just go ahead and take a look at this question together here. And Scott Corporation sold a fixed asset used for operations for greater than its carrying amount. We know that's a gain, right? Scott should report the transaction in the income statement. Now, when I think about the income statement, we have what? We have our operating items, our non-operating items, and then we have tax, which would give us what? Income from continuing operations. And then if we have a discontinued operation, we will report that. Now, I think the reason maybe some of you got confused on C, maybe you're thinking that if you sell a fixed asset, that means you discontinued an operation. So if I'm a university, a teaching organization, and I sell a set of projectors, does that mean I discontinue that entire operation? No, I just sold some equipment out of my company. I didn't sell the whole segment of the company. Okay, so discontinued operations are when I take a whole segment of my company and I do what? I spin it off, I get rid of it somehow, right? So we're not talking about a discontinued operation here. We're talking about just selling a piece of equipment out of my what? Continuing operations. Isn't that what's happening? Okay, so C is not correct. A is not correct, and I don't think anybody picked A, and that's great because we said that what? Gains and losses are reported net. Okay, so we would show what? Net concept of as opponent of comprehensive income, and some of you picked that. Comprehensive income, we'll talk about next time, has a very specific definition as to what goes into comprehensive income, and in no way is in calculation of part of our operating income, and sales of equipment would not be a notion or something that's going to be part of comprehensive income. So now we're left with D, net concept, showing the total gain as part of continuing operations. Yeah, operating items, revenue and expenses, non-operating items, gains like this, and losses, that then constitutes what? Our operating income. And then again, we wouldn't have discontinued operations necessarily, and that would give me my what? My income from continuing operations. And then we would show what? Then we would show our tax as a separate section. So we do not show it net of tax. Tax is its own separate section on the income statement. Question.
If on that question, instead they had said Scott Corporation sold a fixed asset because they closed the psychology department of the university, would then it be grouped into the discontinued operations?
Not so much a department in a university. If it had said something like it closed its, let's get away from university. I probably shouldn't use that as an example. Let's say I was a corporation and I discontinued my men's clothing line and I just decided to specialize in, women's clothing, whatever, then that would be considered a discontinued operation. And I would report, and there's very specific requirements as to what goes into that discontinued operations section. You would have to report losses from the operation of that discontinued operation, impairment gain or loss, disposal gain or loss, would all have to be reported in one section net of tax, and that would have its own section. So if they ask you a question which they're telling you they're closing an entire division of a company, then a whole nother rules click in, and they tend to ask that as its own topic. And we're going to get into that in module 5.
Okay, thank you.
I don't think closing a department in a company constitutes discontinued operation. It's more of an entire segment, and we'll get more into that in a second. Okay, let's go ahead and let's take a look at question. Any other question on that one? Okay, good. Let's go ahead and let's take a look at question 2 here. Okay, I'm not going to wait for that one person that's decided to. Okay, there we go. Okay, so let's take a look at this one. And choice D is correct, which more of us got than the other choices, but a pretty disappointing result here, guys. I mean, we really need to be doing a better job than this here. Okay, so let's just go ahead and let's have a discussion about this question. Okay, 42% of us got D, but this should have been more like 100% of us. So let's just try to understand what's going on here. So go ahead and prepare to defend what you chose. So which of the following should be included in general and administrative expense? So interest is a general and administrative expense. Please defend for people that chose A. How is interest a general and administrative expense? Go ahead. I'll wait. You chose it, I didn't. So we're gonna end class? We're done for the evening? Is that what you're telling me? Okay, take a look at modules 5 and 3 on your own. We're going to go ahead and end class. You could take a look at the Becker lectures if you want to. So when I come back on Tuesday, we will jump into we will start with module 4. Okay, because I'm not going to sit here and talk to myself.
Professor Lord, but you were asking a question to defend the people that responded interest as being G&A. I can why it's not, right?
Well, if you chose A, then you were saying that interest would be a general, I don't mean you, but someone who chose A would be saying that interest was a general and administrative expense, right?
Yeah, but I didn't choose A, but I can say why it's not A as yes.
Okay, go ahead. Okay.
So it's not yes because interest is part of the non-operating as other revenue and gains. So even if it's a revenue or an expense, interest will be part of non-operating. It will not be part of general and administrative.
Right. General and administrative is what? Is operating, and interest is what? Not operating, right? Okay, so clearly interest would be a no, right?
Yeah. Yes.
Okay. Does somebody want to help to recuperate the situation here in the manner that Paulina asked?
Well, for advertising, I mean, we've already pre-identified it as a selling expense. So it would go into that bucket. So it would almost exclude it from the G&A bucket.
Right, so that would also be a no, right?
Correct.
Okay, good. So far I've heard from the people that got the answer right. I'd like to hear from the 68% of the people that got the answer wrong. So 68, 50.
So you asked specifically about A. I picked C because I didn't thoroughly read the question.
Okay. Any A people?
For the interest, because sometimes like I got mixed financial, and sometimes I saw like the interest was coded into the G&A and sometimes it wasn't. So I really think like if someone choose A for the interest to be G&A, they might think that, yeah, if it's like different industry that they say interest should be coded in G&A.
Well, any entity that is coding interest as a general and administrative expense, to me, would have to be some sort of financial institution that's sort of their day-to-day. And you know, what happens is FASB doesn't really get up in your face and say, well, you have to show these things. So it really would depend on the nature of the entity. So I kind of see, I see that. So if you wanted to pick,
That's actually where I'm coming from, Professor, earlier. because I know of, a relative of mine having a lending institution where, I definitely know advertising should not be general administered, but I was thinking for interest, it could be depending on the type of business. That's why I just put it in G&A.
Yeah. What starts to happen there, though, is then it starts to say, well, what kind of, entity is saying, general and administrative to interest and advertising would be A, but interest is general and administrative, but advertising is selling. I mean, I think what starts to happen with this question, and I'm glad you guys have chimed in now. I think what starts to happen with this question is, well, which is the most solid answer, which is if we're talking more a retail entity, then you're probably going to have a strong, tendency to say that interest is non-operating, advertising is what is going to be a selling expense along the lines of what we put on that flashcard. So I think the moral of this story here is what? Think more retail entities on the CPA exam and be prepared to what? To look with what is the best answer, and don't kind of try not to burden yourself with gray area. And then the other moral of this story is what? Pay attention to, what we're saying previously, because you're kind of bringing in a bunch of stuff that is not consistent with what I asked you to flashcard here, right? So the CPA exam, even though it has maybe a foot in practice, it has most of its body in what? In academic, in theory. Okay, and that's why we take this approach of sticking with what we're putting on the flashcard. Okay, all right, good. Okay, and again, guys, when I ask for a discussion, that's what I'm looking for. I'm looking for us to walk away with a better understanding that's going to pay us, the opportunity to get some points come test day. All right, so when I ask for that, I need you to be prepared to participate. Okay, good. So we're going to go ahead and we're going to take a break. We're going to come back after the break and we're going to jump into module 5, because in my opinion, it makes more sense at this stage to talk about discontinued operations, and then we'll come back and start talking about revenue recognition. After we talk about module 5, we'll go back to module 3. Okay, so I'm showing about 627 right now. So why don't we go ahead and just round that up and come back at 640. Okay, I'm going to pause the recording. Please be prepared to remind me if I forget to unpause the recording when we come back. The recording, and the reason I am coming back or jumping, I don't know if I'm coming back, but I'm jumping to module 5 here, is that we're really still talking about the presentation order of information on the income statement. And I think it flows better, in my opinion, to come over and at this point look at discontinued operations. Okay, so we've already said that the income statement, IAS is how we abbreviate income statement in here, right? Has what? Has operating items. In the multiple step, we saw revenue minus cost of goods sold gave us gross profit, gross margin, whatever. So we had operating items. Then we had what? We had non-operating items. Examples of non-operating items were what? Gains and losses. and we reported those net. So if we had a loss, but we had insurance recovery, we would report that net of any insurance recovery, right? And we had, and again, we saw that interest was a good example of non-operating. And then we had what? Tax. And that would yield us what? Income from continuing operations. Okay, now we saw that in some cases we could have what? Discontinued ops. Okay, and that's where we are now. We're saying, well, if an entity has a discontinued operation, okay, they've gone ahead and they've reported their income loss, could be a loss from continuing operations, which includes what? Operating, non-operating items and tax. But what if they had some major piece of their business that they stopped, that they discontinued? How would they report that? Okay, and let's see what they tell us. And as you've seen in the little thing I put in the margin here, discontinued operations are reported separately from continuing operations on the income statement. Yep, we know that. And we report that information net of tax. Now, when you look, the tax from my continuing operations was explicitly displayed there. The tax effect of my discontinued operations will be backed out in a side calculation, and anything I report in the discontinued operations will be net of tax. Okay. Now, they tell me that a discontinued operations may include a component of an entity's group or components of an entity. So again, we're getting into what? Major sections, not just one department, but we're talking about components of an entity. We're talking about subsidiaries, segments, an entire line of business. Okay. Now, when we report that, it can consist of, and it can consist of impairment loss, a gain or loss from the actual operations, but I'm just going to go ahead and call out the loss from actual operations. And the reason I'm ignoring the fact that they say gain from the actual operation, if you have a segment that is operating at a gain, are you going to get rid of it? No, you'll probably keep it going. So in most cases, you have a segment of your business that is losing money, is taking a loss period after period, and you want to get rid of this thing, right? Okay, so it's rarely and almost never on the CPA exam that you get rid of a segment that's showing a gain. It's usually a segment that is generating a loss so a loss from the actual operations, and then a gain or loss on disposal. And that could be a true gain or loss. That could actually be a gain or loss. If you sell the segment for more than its book value, it's going to be a loss. If you sell it for less than its book value, it's going to be a gain. And they tell us all of these amounts are included in the period in which they occur. Okay, very important, because the CPA exam likes to trick you into thinking that you should take an amount as a loss when you determine that that loss is going to happen in a future period. No, we take the amounts in the period in which they occur. So this flashcard right here really tells you everything you need to know, which is we take the amount of the discontinued operations report, show net of tax. They can consist of what? 3 things: an impairment loss, that's a 1, a what? A loss from the actual operation. And again, I didn't want to highlight the word gain there. I could just get rid of the, hey, pretty good. A loss from the actual operation, that's number 2. And then 3, a gain or loss on the disposal. Okay. Now, so when we're talking about that discontinued operations, we can use the mnemonic right here. What for the discontinued operations? Use the mnemonic LID. The loss from operation, the impairment loss, and what? the disposal, and that could be a gain or a loss. So you can flashcard that mnemonic. The discontinued operations can consist of the loss from the actual operation, the impairment loss, the disposal gain or loss. We're going to blow the lid off of this operation. That's what goes into the discontinued operations section. So Kylie, to your question, that closing a department, no, but if we're getting rid of an entire segment, yes, we'll report that down in the discontinued operations segment, and it can contain these elements. Now, when we present that, we do not necessarily show each one of these items as a separate amount. We can show it as what? As one amount. And you saw that in those examples where they're just showing whatever it was, $25, loss from discontinued operations, net of tax. You could show that as one amount. Okay. So flashcard, the elements that are included, the loss from operation, the impairment loss, the disposal gain or loss, all of those amounts are shown net of tax in the period in which they occur. I could not say another thing about discontinued operations right now, and you'd be able to answer every question just from that flashcard. Okay, how to report discontinued operations? It includes loss from the actual operation, impairment loss, disposal gain or loss. Those amounts are shown separately on the income statement, net of tax, and they are taken in the period in which they occur. Okay, now, when we are considering what will be a discontinued operation, it is something that we have already disposed of, or it is something that is classified as held for sale. So we either got rid of it during the period, or we have committed to a plan to get rid of it during the period. And that's typically what you'll see on the exam. They'll say the management of XYZ entity is going to get rid of its XY ABC segment, whatever. The ABC company is going to get rid of its, clock division, I don't know, whatever, or it disposed of it during the period. Okay, so it's an entire segment. Okay, so a good way to look at this, just to visualize a little bit, and you got to go back a little ways to really get to, how this might work. You've heard of GM, General Motors, and General Motors has all kinds of different types of product lines. They have they have their, electric cars. They have their, they have the Buicks. They have they have their trucks, the GMC trucks, all that. You're too young to remember, but a long time ago, they had a car called an Oldsmobile. Okay, and in those days, people like Oldsmobiles, but as times change, people don't want to be in a car that has the word old in it, right? People identify their youth and whatnot through what vehicle they drive. And so Oldsmobile became, a product line that GM decided they want to get rid of. And when they would have gotten rid of that, they would have shown the loss from the actual operation, impairment loss, disposal gain or loss in a separate section on the income statement, where they were reported everything net of tax, and they would have shown that separately from my continuing operations. Okay, now you come over and they talk about disposal of a geographical area, major line of business. Again, it's not just a department, it is a major section of the business that they would be disposing of, like that Oldsmobile. Okay, now they say, well, what should be included in the discontinued operations calculation? And you already know this, which is what? The results of the operation of the component. That's the what? That's the L in lid, the loss from operation, the impairment loss. Okay, that's what? That's going to be the I in lid. And the disposal or gain or loss, that is what? That is our D in lid. Okay, so you already know that. I've already asked you to flashcard that. The things that go into the calculation of the loss in the discontinued operation, or the loss from the actual operation, impairment loss, and disposal gain or loss. Now, When we look at the impairment loss, okay, we are able to take a subsequent increase in fair value of the component after we've taken the loss. Okay, so we take the initial loss. Okay, the initial loss is recognized for the impairment. Okay, and we'll literally look at the fair value of the entity versus its book value, and if in most cases for CPA exam questions, in reality, if we're getting rid of a segment, probably its fair value is below its book value, so we would have an impairment loss. Now, for some reason, there's a subsequent increase in fair value, okay? Then we will be able to write it back up, but not in excess of previously recognized losses, okay? So let's say, again, we're looking at a segment, and let's say the fair value of that segment, well, say the book value, I should say first. Let's say the book value of that segment is $1 million. But let's say we look and the fair value is now what? 600,000. Well, we have impairment of what? 400,000 there. So we would literally debit impairment loss for 100,000, and then credit what? The segment for 400,000. Okay, we would literally sit there and write that segment down so that it's now having a book value of 600,000, and we would have that impairment loss, and that impairment loss would be part of the overall what we're reporting for the discontinued operation. Okay, now if it comes back for some reason, you can write it back up to what? Back up to $1 million, but you can't write it up to 1.2 in that. You can't write it up past its initial book value. Okay, once we have decided that we are going to dispose of a segment, we are not allowed, we will no longer, I should say, it's not that we're not allowed, but we will, well, we're not allowed, and we will no longer report depreciation on that. When I say we're not allowed by the accounting standards, you do not report depreciation anymore. Think about it. Depreciation is the allocation of future economic value to expense, right, as it expires. Well, if you're getting rid of something, it has no future economic benefit. So what do? You stop depreciating at that point. Okay, so we know that what? We know that the discontinued operations section report things net of tax. It consists of the loss from the operation, the impairment loss, the disposal gain or loss. Impairment loss, we write it down. If it recovers some of that impairment, we can write it back up, but not in excess of what it was previously carried at, and we stop depreciating that particular assets that are part of that segment at that point in time. Okay, now you come over, and on presentation and disclosure, we say that we present it as a separate component of income. Well, income from continuing operations, which are going to include what? Our operating items, our revenues, our expenses, our non-operating items, our gains, our loss, our interest. That will give us what? Income from continuing operations, separate section for discontinued operations, and we report everything in there net of tax. Okay, now remember that I've said that you can report that as one amount. Just report it as one amount, even though you may have what? The loss from the operation, the impairment, and the disposal gain or loss components of that. You report it as one amount, but you must disclose somewhere, either on the face or in the footnotes of the financial statements, how much of that total that you reported is consisting of a gain or loss on disposal. That must be disclosed somewhere. So flashcard that. Okay. Now, they go ahead and they give us an example here, and we have this golf division, and the golf division is the piece of the company that they're going to be getting rid of. Okay, that's the discontinued operation, and we're gonna have to report on the income statement separately, everything that happens with this golf division, okay? So they tell us in this example, the golf division of all sports is the corporation, we have this major division, the golf division, has been losing money on a monthly basis. The golf division's income statement accounts are also presented below, that's right here. The board of directors decides on April 30th, year one, to dispose of the golf division. Now, this is interesting. This is a good way that they wrote up this example, because what the examiners will do is they'll have the decision to dispose of a segment happen after the start of the year, trying to trick you into teasing out what happened before the decision as part of continuing operations, and only what happened after this decision as discontinued operations. No, you're trying to report the entire results of that operation that's going away. The objective of this reporting is so that users can see what the company will look like with that entity gone. And then we're going to report out separately the stuff that is going away. So we would report the entire 12 months of the operation in the discontinued operations section, even though it didn't happen and the decision wasn't made until April 30th. Okay. Now they tell me that the carrying amount of the golf division was 4 million and its fair value was 2,200,000. Do we have impairment? We have impairment. Okay. They're telling me that the golf division is showing what? 4 million, and it should be showing what? 2 million? Should be showing 2,200,000. How do you get from 4 million to 2,200,000?
Subtract 1.8 million.
Good. We're going to have what? 1,800,000. We're literally going to debit what? Impairment loss, 1,800,000. And we're going to credit what? The golf division. And I'm showing it as one big item. You know, there'd probably be several assets that we would have to credit to bring that down to the 1.8, to the 2.2 million, but we're gonna have a loss of 1.8. Good. So we know that if we're sitting there and we're talking about what goes into discontinued operations, impairment is going to equal what? 1,800,000. Now that's before tax, and we know that we have to report this stuff net of tax. Okay, but we'll work on that here and again in a second. Then they tell us that what? After months of negotiation, we finally sell the thing for what? In year two. And in year two, we finally sell the thing for 2 million. So we're literally going to end up selling it for less than what we were carrying it at in year two. So we're going to have a disposal loss here, aren't we? But we take that amount when? In the period in which it occurs. We won't take that until year two. And then the golf division losses in year two continue to be 200,000 per month. Well, we'll take that in year two when it occurs. They give us the tax rate. We need to know the tax rate because we have to report everything net of tax, and assume that all sports income from continuing operations is 4,875,000 and 5,200,000 year one and year two respectively. Okay. Now, if we were preparing the income statement, okay, and I'm not going to worry about all this detail, guys, because I don't want to sit here and spend 3 years trying to prepare a full multiple step income statement. But we know we'd have our revenues, our expenses, our gains, our losses, and then we would have what? We would have in our tax, and then we'd have income from continuing ops. And for year one, they're telling us it's 4,875,000. And for year two, it's going to be, what are they saying, 5,200,000? With me so far? Okay, and now it's gonna be our job to figure out what goes into lid for the discontinued operations. And we're gonna have to do that in this problem for year one, year two, and we're gonna have to report everything net of tax, right? With me so far?
Yes.
Hello?
Yep.
Okay, okay, good. So now we come over and we start with year one. There's that 4,875,000. They're just bringing that number right over. That's that 4,875,000. That's the year one number. That's the continuing operations piece. And now we start to go through and figure out the discontinued operations. And let's see where they got these numbers from, because we know that these numbers have to be what? They're going to be taking the period incurred, and we know that these numbers are net of tax. So let's see where they got this loss from the operation of the discontinued segment. And so we come over and where do they tell us that the thing lost 2.4? Sorry, guys. This example used to be a lot better than when they just told us that amount. Was it up in the problem here?
I think it's in that following page. Let's go further down.
It's on the following page?
Yeah.
Well, where do they
Further
tell
down.
us it's 2.4, huh? Where do they get this 2.4?
Yeah.
I don't know, maybe they calculated it.
Professor, didn't you
I
say
don't
it said
give a damn.
200,000 per month for 12 months for the first year?
That's year two though. Huh? Oh, is it for the both years?
I thought you said it was for year one and year two.
Is it? Where they say they were losing 200,000 a year. Oh, for year one. I mean, a month for year one. Okay, I don't care. It's 2.4. I don't know where they got that number. And on the CPA exam, they would tell you what this number is. They would tell you for year one, the loss from the operation of the thing was 2.4. I don't know where they got the number. Okay.
Isn't lines on top? It
The
says
first
loss from
line has it.
all of that. It's all that calculation.
Yeah,
from
and I don't care. This is too much. Okay, thank you, but it's too much. Okay, thank you. But that's too much. And that's why I'm getting frustrated. In the exam, they're going to tell you the loss from operation was 2.4 and the tax rate is 40%. Okay, so they're making this problem more complicated than they need to.
Professor, would the tax component ever be more complicated than that on FAR?
No.
Okay.
Okay, so they tell us that the tax rate is 40%. And so net of tax is what? 60% of that? 1 minus the tax rate gives you the after-tax effect. So 2.4 times 0.6 is where they're getting this 1,440,000 because we have to report that net of tax. Okay, so on the exam now, they're throwing out the baby with the bathwater here, guys. They're making you do all that calculation. On the exam, they're going to tell you the loss from operation is what? 2,400,000. The tax rate is 40%. I have to report that net of tax. So I would report what? This 1,440,000. Then the impairment is, we already calculated as what? The 4 million minus the 2.2, that's that 1.8. But again, that has to be reported what? Net of tax. So you multiply that by 60%. We now have what? The two amounts net of tax, and we now report what? We now report those as a subtract, and we could show it as one amount. So 1,440,000 plus the 2,520,000. I mean, excuse me, the 1,880,000. You could just report that. You could put could report as one amount. And so that would be 2,520,000 if we reported it as one amount. Okay, that's okay too. And we saw that in that earlier example when we were looking at income from continuing operations. They just showed you one line item. Okay, and then we take that from our continuing operations, and that gives us our net income. Question. Okay, now in year 2, they tell us that, and they told us up in the problem, and Rashad, I think that's what you were pointing to. In year 2, they tell us that they continue to lose what? 200,000 a month. We take the amounts in the period that they occur. We didn't get rid of the thing until June 30th, so that's 6 months. When you're on the CPA exam, make sure you count your months. All January, all of February, March, April, May, all of June is 6 months. Don't make the mistake of just, oh, okay, June is the 6 months. So make sure you understand. If it said June 1st, they got rid of it. Don't count June. Okay, but in this case, it was June 30th, so we count June. So that's 1.2, the loss from the operation. That's the L in lid. And so we take that times the 60%, that gives us the 720. And then they told us that they finally sold the thing for 2 million. Well, that's the what? D in lid, that's the disposal, in this case, loss. We report that net of tax. We multiply that by the 60%. That's where that 120,000 comes from. Again, you could report that as one amount. Okay, so if you were to add those two numbers together, what does that come to, guys? 840. You could report it as 840,000. Okay, could report as one amount, but what? Must disclose the 120,000 disposal loss. So again, you don't have to report those as two separate items the way they showed it there, but you could show it as one amount, and then you'd have to disclose what that 120,000 was. Question.
So Professor, in year 1, we already recognized impairment of 1.8, right, based on the carrying value and the fair market value, right? So
Correct.
1.8 as impairment loss. But why would we consider the loss and disposal as 200?
Well, because by the time we got to year 2, right? Because what happened, remember in year 1, I showed you this, that we had written it down to 2.2.
Mm-hmm.
That happened in year 1, right? But by year 2, we were only able to sell it for what? It said after months of negotiation, we were finally only able to sell it for what? For 2 million, right? So that generated an additional $200,000 loss, but now we're not calling that loss on impairment, we're calling loss on disposal. If we sold it for just making a number up, 2.4 million or 2.5 million, we'd have what? A $300,000 gain.
Got it. Yes, thank you.
Yep. Question? Okay, so again, guys, just to go back to the point that I was getting annoyed about, they made this overly complex. On the exam, they would do what? They would give you this number, like that, they would give you what? They would give you, well, they might make you do a calculation like this because that's so simple, but they're going to tell you what is the loss from the operation. They just want to, where they're going to, mess with you is to see if you know that it needs to be reported net of tax, and you know that those amounts are reported when? In the year in which they occur. Notice we took those year 2 losses in year 2, right? And the year 1 losses in year 1. Question.
Will there be like the 2 years?
Nah, no, because for 2 reasons. One, if it starts to go into a 3rd year, it starts to beg the question, well, is this really a discontinued segment? I mean, what's going on here? Okay, so no. And on the CPA exam, they might go into 2 years just to test, that the amounts are taken what? In the period in which they occur. Okay, good. Let's try this question. This is a good question. No other questions? Okay, let's try this one. I'm going to go ahead and relaunch the poll, turn you loose on this one. Okay, looks like most of us had a chance to look at this one. And I went into 3 minutes on this because this might be a question. I would think by following the rules that we talked about, you actually should be able to complete this in about 2 minutes. But I gave you a little more time because we have 2 years that we have to calculate, etc. But you really should be able to answer this in 2 minutes, and you should never go over 3. So sometimes in class here, I'll give you a little more time, but you should have really been able to do this one in about 2 minutes, okay? But I'm not worried about speed right now. I'm worried about accuracy, okay? And you did good. 85% of us got this correct. A couple of us got a little off track, but let's take a look at that, okay? So I'm going to stop sharing and I'm going to go through this question. And they tell us, the answer here is C, okay? But they tell us that during year 3, okay? And notice, guys, they don't say, oh, okay, during January. Oh, it doesn't matter. Okay, it doesn't matter when in year 3. It could have been December of year 3. So this is a little bit of a question that I don't like the fact that they said during January, because it makes you think that it had to happen towards the beginning of the year. It could have been in December of year 3 that they agreed to sell the assets of a product line, and the decision present a major and significant effect on the operation results. In other words, all of those words are pointing to this isn't just one department or something. They're getting rid of a major segment of this business, okay? Now, when I look and they start asking me amounts for year 3 and year 4 that would be associated with the rest of this information that talks about this, division or whatever that they're getting rid of, I know I have a discontinued operations section question. So I set that up because I know that the elements that will constitute that are going to be loss from the operation, impairment, and the disposal. I know those are the elements I need to consider. And I know that I take the amounts in the period in which they occur, and I take them, what, year 3, year 4, okay? I don't know what putting X. You just put year 3, year 4. And I know I'm going to take those amounts in the period in which they occur, and I'm going to take them net of tax. Now, when I look in this particular case, they told me to do what about tax? Disregard tax. So I don't even need to do the net of tax calculation here. So I can just take these amounts as they're reported to me in the question, as they're given to me in the question. So the sale was completed on January 15th, year 4, and resulted in a gain of 900,000. When do I take that? In year 3 or year 4?
In year 4.
Year 4.
I take it in the period in which it occurred. I had a disposal gain of 900,000. That goes in year 4. Okay, good. Parts operation losses were 600,000 in year 3. Do I take that in year 3 or year 4?
Year 3.
Take it in the period in which it occurs. 600,000. Okay, and 50,000 for the period January 1st to January 15th of year 4. When should I take that?
Year
Or-
4.
That's year 4, because that's when it happened. And then they tell me disregarding income taxes. Okay, I didn't have impairment loss in this one. You don't have to have all these elements. Okay, so I know that it's a what, 600,000 loss in year 3 and a net $850,000 gain, considering the loss on the gain on disposal loss from operation. So it's 800. It's choice C. If you chose D, which I think a couple of us did, that's because we made the mistake of taking that 50,000 loss for year 3 and for year 4, I should say, in year 3. No, you take the amounts, what, in the period in which they occur. Question. Okay. That's enough for tonight. I can't get through very well module 3 like I thought I would be able to, and I don't want to rush it. Okay, so we will pick up next time going back to module 3, module 4, revenue recognition, heavy area on the exam, 10 points, and then we'll come in and we'll start talking about accounting and it changes in error correction in module 6. Oh, however, I do, and I'll spend a little bit of time with you on that. I do want you to, on your own, look at module 8, adjusting journal entries. Okay, I'm not going to spend time going through that with you here necessarily, because I think that it's pretty self-explanatory. You don't even have to watch the video. You could read through this. Okay, but adjusting journal entries. Okay, and you can see here. Well, actually, yeah. I don't want to do it now because I don't want to do it now. Don't worry. Here's what I want you to do. I'll go through this module with you now that I'm looking at it. I'll go through it with you, the adjusting entry. So don't worry about it for now. Okay, module 8, don't worry about it. So right now, your job is to get through the homework for modules 1, module 2, and module what? Module 5 was it discontinued operations? Is that correct?
5.
Yeah, okay. And I will be looking to see that you're getting through that homework, okay?
Professor, I have a question.
Yeah.
Did you receive my email regarding the duplicate Becker account?
Yeah, do me a favor, Starla, and I know it's annoying, but if you can, please send me an email again telling me what email you want me to look you up under there.
Sure, we'll do so. Thank you.
Yeah, I know what the issue is, but yeah, just remind me again and so I can find you in there.
So Professor Lord, we have to go over all the multiple choice questions.
You
And
should be doing your best to complete the multiple choice questions and the task-based simulation with modules 1, 2, and 5, correct? You don't have to watch the lectures, guys. I do not recommend you watch the Becker lectures. I really don't. I mean, some people want to watch those. I think that is a very inefficient choice to make because you've already gone through the lecture. I'll post the lecture for you. If you have a one-off where you want to go back and watch what we talked about, that's your best bet. So you don't feel like, even though it's listed there, something you're supposed to do in the Becker material, don't watch their lecture. It's not necessary. Only do that if I tell you to, but you should be looking at the multiple choice questions and task-based simulations, yes.
And for the sections of module 1, 2, and 5 that you didn't specifically highlight and go over with us, should we be going through that and reading that on our own?
No, if you run into something that you think perhaps we didn't talk about and you're kind of sitting there looking at that question like stunned, like what the hell is this? Then in the software, they have a show text feature, a show lecture feature, and it takes you to the section of the book that's talked about. And if it's something we didn't cover and you end up with a multiple choice question on it, go ahead and add a flashcard for that. I'm here trying to get you a good 80% of what you'll see in the homework, but there are a few less covered things that I don't spend as much time with here in class. Add a couple flashcards for those, but for the most part, the big chunks should have been covered by what I talked about and what I highlighted. And I don't think you need to do a special study on those.
Okay, thank you.
I don't recommend reading the book like a textbook. What I recommend is that you're taking the book and you're saying, what did this freak tell me? What did John tell me to flashcard? And you're going and you're make those flashcards or see that you have the Becker cards, memorize those cards, jump into the multiple choice questions, and then do the task-based simulation. As I mentioned on that how to study, and there is that how to study document that's contained on e-learning. Question. Okay, guys, good work for the first class. I think you kind of are getting the sense that this is a little bit like joining the Marines, right? Okay, there's a little bit of that element, and then I'm going to push you towards the success on the exam. That's what I want for you. I want you to get this stupid exam out of the way. A plan to get it out. Oh, that's another thing. Spend some time on that CPA planning document if you haven't done that. How are you going to accomplish this? And then the exercise towards the accomplishment of that goal is doing these flashcards and these homework modules. Okay. All right, guys, I will see you next week. Have a good rest of the week. I will see you on Tuesday next week. If you are taking regulation as well, don't forget to, you know, be nice to be nice to Alex on Thursday. Starla, did you have another question? You're good.
No, that's totally accidental. Sorry. Thank you.
Okay, yeah, no problem. Okay. All right, guys. Have a good
Thank you.
night.
Have a nice night.
You too.
Yeah.
Thanks, Professor.
Thank you.
Bye-bye.